Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday, the 21st of December, 2020, winter solstice. This is the day with the least amount of sun, and then we start going the other way. Thank God, right? I get depressed when it's always dark like this. Living in Chicago, you get these winter skies that I hate. But I will tell you, in the wintertime, I'm up early anyways. Like this morning, I got up at 3. And I'm looking at the markets, and I ran to my office downstairs and going, something is brewing. And the markets were already down in the Dow several hundred points, and I'm watching currency trade and others. And I've been up since then, looking at the markets, and it's interesting. Opportunity day for some, no question about it. Swing day, yes. We had today the confluence of they're going to pass the COVID-19 relief bill tonight, along with $1.4 trillion in a budget package. Everybody's then going to go home and money will come out for relief. This is not stimulus money. If you think it is, you're sadly mistaken. This is money that keeps businesses that are about to fail from failing. Wrote about this morning in my full research report. Stimulus would be building bridges, roads, doing things that putting a lot of people to work. This is saving people. There's a huge difference between the two. When you take a look also then at COVID-19 and the mutant strain that hit the Brits, 40 nations are now refusing to fly or take in travelers from there. I don't blame them. Why the U.S. border's open is beyond me. It makes no sense. That doesn't mean it's not here. I do agree with Governor Cuomo that it's probably here. It's already in Italy and other parts of Europe. Why wouldn't it be? Do you think we don't have people going back from Europe that may have brought it? And given that it's spread 70% more or quicker than the regular COVID, come on, it's probably here and we just don't know it yet, and we'll hear about our first cases. So you put that together and you can put the Christmas holiday week together, overbought conditions, crowded trades. Yeah, I think that you had crowded trades in the stocks and now they've had their breather. So me stop talking, let's go to the charts. On the weekly charts, we're down 40 points at this point in the week. So what? Down 1%? That's not much. In the scheme of things, it's nothing. In the scheme of things, that's pretty big. I want to take you back to today's range because you went from 37.24 in the S&P to 35.96. So you went down 128 points. That's a big move. You don't get these that often. You get them, but not that often. It's also an outside day down. So right off the bat, I get excited because outside days trigger another set of types of trade that comes after it if the high of that day is taken out. Remember when I come back from my short, I'm going to try to take 5 days off right at New Year's. I will miss very little trading, and I don't want to put out updates when I go. I need to get my brain clear for 4 or 5 days. Then I come right back at the marketplace. But the first thing I'm doing is creating 3 mini courses on inside, outside days, slow stochastics, and Bollinger Bands. They are not going to teach you what they are. They're going to pick up where my charting course leaves off, and this is the doctorate in those particular vehicles. I have not recorded them. I'm just laying out what I'm doing, but I think you'll find it well worth your time and effort, and yes, it'll be paid for. But you have your outside day down. The market certainly rescued itself. It took out this whole trading range, came back strong at the end of the day, and still over the 18-day moving average of closes. So the bias is up. You lost your way in a trend. The market up until here had a pattern of higher lows, higher highs. If you take out this number, 36 and a quarter, it loses its way. To get through it, you had to get through the 18-day average. And I was watching it intraday. It paused there, no question about it. But then as the whole market let go, everything let go with it. All right, what stopped the rally? Why did it suddenly stop where it did? Ta-da! Bollinger Bands, right up to the top of them. You tell me where this market went. The high was 37.24. The Bollinger Band, 37.23 and a half. I think pros take a chunk of money off the table. the first time you hit a Bollinger Band. And I am assuming because you're over the 18-day average and the bias is up that one is long or on the long side in some manner, certainly not on the short side. And you had the higher lows, higher highs. Do I know if you were long or not? No. But I know when the bias is up, why are you short? That I'd argue with you. And market hit that number, let's go. Where did it go to? It went to the lower band. Now, while the panic's on, if somebody is short the market as you're dropping, what are they supposed to do on the first time you hit a lower Bollinger Band? This is Ira terminology. This is what Ira teaches in his charting course because I believe that. That's where they come out of the market. So now you've got the longs out. If they went short, and I don't know if they did or didn't, but I'm assuming the bias is down from here. That's where the market grabs traction, and look where you're at. You've stepped out of a trend. Gee, Christmas coming. We have 2.5 days of trading because Thursday all the markets close around noon. People evening their books up. Wait a minute. In November, we were up 11%, 12% in a lot of the indices. I made a statement to you that the pros would be foolish that get paid on return on money. What does that mean? If you're a money manager, you're looking to get paid on what you made that account. It's often the high point of the year or the end of the year, wherever it comes in, there's going to be some method. I've seen so many of them, there's no one way. But I don't care if you were flat. You came into November and the market's up 12% in stock indices. I'm assuming you're not a bear, that you're trying to follow whatever the market's doing and beat the indexes for the year. Why would you keep gambling? So I think the trade is, number one, dropped off from those people. Those are the big time traders. Then we leave the retail guy, and why is he trading aggressively right in front of Christmas? I couldn't answer that to you, but he does what he's going to do, and I get it. We have COVID, a lot of people are home, so they're looking at it. It just means thinner markets. The chart patterns don't trade. Understand? So this is where you're at. Do you have a trend? No. Now you have a lower low, higher high. You're stuck in the Bollinger Bands. If you take out the highs of today, the big outside day, I don't know what to do with that. Normally, I'd be looking for a moving average over the market or the Bollinger Band, but it's over it. My rule wouldn't come into play. When we look at momentum, were you embedded? Absolutely not. You're just overbought coming in. This is Friday's close, and still overbought. And I know traders don't understand what overbought means. Overbought means you're not in a good spot. Oversold, you're not in a good spot. What is a crowded trade? A lot of people talking TV and whatever, newsletters. Oh, they're all doing the same thing. Gets dangerous. A lot of people look at the CFTC reports to see what are the pros and the small-time traders, the smaller traders doing. I don't even look at those. The chart action tells it to me. A lot of people do, don't get me wrong. I have been one to believe, doesn't matter. This tells me the story. Everything I need to know is in price. In the NASDAQ, you're still bullish. Why? Higher lows, higher highs, but is that really the low? You can't really count it just yet. Why? Because this low took out that one, and that's the higher high. You need to get through today. What the market actually did is it fell back to the 18-day average. Now, let's take today, which is Monday, not go to Tuesday night trade. Both numbers over 80. Friday, both over 80. The day before, both over 80. And the day before. Whoa, what about that? Not there. So from Wednesday, Thursday, Friday, I had my fully embedded reading. I need several days or more to be embedded. What does that mean for the pros that trade slow stochastics? In my opinion, they're a buyer at between a moving average I don't show you here. I'm not going to even mention what it is. It's in my subscriber video, and this number. 12,454. That's their buy. Market went there, and their objective is 12,820. Don't believe me? Get a free offer to my subscriber video. Go to our website. It's there. I'm talking about it. The videos, I record them every day and just did one this morning. What about in the Dow? Higher high, lower low. But you're caught in Bollinger Bands, in what I call a pipe. When I see a pipe, I don't get involved. Why? I don't want to get involved in recommendations because you're going to churn. You'll go up, try to break out, you get thrown back, you get stopped out of that position, you think it's going down, it comes back at you the other way. Narrow bands are a churn. When they come out of the churn, you're trying to catch a trend. That's what you're doing. These are trends. That's not a narrow band. That's a narrow band. You can see the difference right there. In the Russell, what the Russell did, it's got a fully embedded reading. What are the pros doing? If they can, they've come out of the market against the upper Bollinger Band, probably back here. They're looking to buy the first hard break. Well, you went to the 18-day average and you came roaring back. Again, I think they bought one of those moving averages I talk about. There's only one of them between there and here, and I think they loaded in between those two numbers, and I think they had a heck of a day, a heck of a Christmas. We'll see if the market lets them out at the Bollinger Band, or if it loses the reading, I think they come out. But there's a way to come out too. In the VIX, I wouldn't be surprised that you come right back into that number. Have we formed a base here? That is the bigger question. You have a lower low, higher high. Do you disagree that that's a pipe? We talked about that. Often you try it and you get whacked. Today, if anybody was buying that it would keep going up, by the end of the day, they probably were behind. Is it trending? It is not trending. The market is trying to break out, but momentum is flat, bias is up, and there is no pattern of a higher high, lower low. None. You have in one manner a lower low and a higher high. It is not a trend. In the T-bond market, the market is fighting to stay over the 18-day average, which it has not been able to do. It is not in a trend. You have a lower low and a higher high. I see nothing there. In the 10-year notes, today's action actually at the end of the day set up a trend that's up. Higher lows, higher highs. What you don't want to see taken out is the lows of Monday. If the low of 137.23 is taken out, the odds favor the market will try to break down, in my opinion at least, to the lower Bollinger Band. I'd be wrong in my thoughts if the market got over today's high. Well, that's one heck of a big risk. The range today was 137.23 to 138.08. It's over $1,000 risk. Am I keen on $1,000 risks? Dollar index, fully embedded reading. What do you do on the first rally back up? You got it. Looking to go short. And that's what I think the pros did. I don't see anything at all that changed. You're not looking, when you have an embedded reading, at the swing line. You're looking at the embedded reading. And you have to learn another step with that. That's why I'm doing the mini course. But I teach this all in my charting course. Now I'm going to carry you to the next level when I do those. As for the Eurocurrency, the pattern in this is still higher lows, higher high. You're still in an uptrend. The one thing I was telling people, I know it in my morning updates, on this break, I'm going, friends, I'm friendly this market. I'm not bearish. I think this market looks good. And by the end of the day, I felt like a hero. Ta-da! The market had come back where it's at. Lose the embedded reading, I think you got to get out of the market. British pound, why do you want to trade Brexit and the situation that they're having with this mutant virus? In fact, I think for about 6 weeks I've told my clientele not to trade the British pound either way. Just stay away from it. You can't play this political game and come out of it in good shape. Between the hours of difference, between them being ahead of us 6-7 hours in different parts of Europe, and things can happen, and then you're coming here on a Brexit deal, who knows? France is still trying to work with them to open up some of the ports so they can get goods to them. I don't know if they're going to do it or not. I think Mr. Macron wants to, and happy birthday to him. Today's 43, by the way. And we wait and see. I'd stay away from political events like that. You also have a political event in the SPDR ETF, right? With the COVID-19 and all that's going on and the futures. We played it, but now it's baked into the market. The only surprise would be that Congress doesn't pass it or the budget for some crazy reason. How do you trade markets like this, on times like this? You cut back your positions. Now, you don't have to cut back the contracts, you can go to a smaller contract. These mirror the big ones. This is probably the most successful contract I've ever seen the Chicago Mercantile launch. The 1/10 size contract in all of these. And you build your positions with them. You can trade 10 to get to 1. Is it expensive? It is not. Is the margin less? Yeah, it's 1/10. What's the value of a tick? 1/10 instead of $5, 50 cents. And what's the commission? We charge $1 per side commission. So you can trade to your blue in the face with these, and it turns out to be a lot of fun. I remember somebody wrote me and said, oh, I don't want to trade those. And I went, well, yeah, I don't know how long you've been around futures, but when the margins start getting to what they are in futures contracts, these become very, very important, and people move to them, and that's why you're getting the big following. To find out more, all you got to do is type in www.iraepstein.com, but /micro. It's not on the website. That's how we built it. We want it to be this way. It explains everything you need. My staff can get you going with it as well. This is what I call the way that you should be walking into futures and maybe just trading them. You know, who said you can't buy 4 or 5 of them? It's a half a contract. Commission $5 a side. If you're not right for the $5, you're not going to be right in futures. You know, what can I tell you? I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.